What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode is going to be your daily stock market technical analysis update. We saw some wild swings in the stock market today with a huge gap up just followed by a sell-off all day long, but we did close higher on the S&P 500 and the Dow Jones. We have a lot of price action to talk about tonight, but before we get into the charts, please help me out by smashing that like button and go ahead and subscribe to the channel so you can follow along with all of my updates. First up, we'll take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the SPY ETF, we did close up the day 1.26%, but we did open way up here at 364. And I'm pretty sure today set history with gapping up to a new all-time high. We gapped up over 4.5% to get to a new all-time high, and that is incredible, but it also left a lot of price action where we've never had any price discovery on the S&P 500. We were well above the upper Bollinger Band, and we also extended past our magenta resistance trendline, which we know has been very critical in calling the market top on the S&P 500. You can see the last time we got above that magenta trendline, it was followed by a huge correction in the stock market, and today's gap open was well above that resistance trendline as well. Now you can see we did close below the trendline, but we are still trading very close to that trendline, which is right around that $356 level. We also opened up another gap, and you can see that that gap will close at a price target of $351. We also have the Fibonacci retracements on here, and we closed right at the 0.236 Fibonacci retracement at the close, which is right around $354. If we can go below there, we're likely going to close the gap at $351, and if we continue down, we also have our other Fibonacci retracement at 0.382, which is right around $348 on the SPY ETF. You can see we're getting some very bullish trending with the moving averages, and that 5 EMA is basically going up in a straight line, and we're getting pretty far extended away from that 5 EMA. So it's likely we could still see retracement and more pullback in the price action and still maintain this bullish trend. So on the stocks channel, we're still long-term bullish, but when we see price action like this that gets too far extended and goes too far too fast, we know that we're likely going to get a retracement. So yes, we're not bearish and we have bullish price action and bullish trending, but we're being realistic about the stock market and we're still seeing opportunity for more pullback and more downside price action before we continue higher. You can see that we were in this consolidation wedge pattern where we were forming lower highs and higher lows, but with today's price action, we did form a higher high on the daily chart. So that means we're not likely going back into that wedge anytime soon, and that wedge, if anything, is now just going to act as a support level. So we could find support at our previous high, which is right around 352, but it's likely going to be that we're going to close this gap down at 351. Now we did have this nice ABC correction pattern over the last couple of months, and we know after an ABC correction, we could go back into an impulsive move, and the long-term trend has been bullish ever since the crash in March. So we've had this nice ABC correction, and it's likely we could be resuming that bull market, and this could be our first impulsive move. So getting a daily higher high is always going to be bullish price action. So we could be forming impulsive wave 1. We could pull back for somewhere around one of these Fibonacci retracement levels for wave 2, and then we can continue higher on a wave 3. So right now we're looking for buying opportunities, and we're watching to see one of these levels hold up as support for a potential position to go long. Remember, there's no reason to be bearish on this market. We have bullish price action and bullish trending. So if you're a bear right now, you're just going against the trend, and you're likely getting burned at every opportunity that you try to short. Of course, this open was absolutely extreme, so you could have shorted for a day trade, but you don't want to become too bearish on a market with strong bullish price action and strong bullish trending. So it is possible we could retrace all the way back down to the 0.618, which would also close that gap right around $338. So even though we have bullish price action and bullish trending, it doesn't mean that we can't see one of these Fibonacci retracement levels, which could take us all the way down to the next gap closure at 338. Now that's still a bullish price action because that would form us a higher high, and then we would also have a higher low, which means we're still trending up in a bull trend. So there's a lot of reasons to be bullish on this market, and we're looking for opportunities to buy the dip right now. Remember, if this market's still confusing you, we have the Stocks Channel Discord where we're posting entries and exits on trades, and you can find the link in the description on how to join that Discord. Next up is the Nasdaq 100 QQQ ETF, and we see the Nasdaq 100 also gapped up today and flushed out, closing just above the 5 EMA. Now on the Nasdaq 100, we are back into our consolidation wedge where we've been sort of ping-ponging between a resistance trendline and a support trendline, and we're now back within that wedge. On the Nasdaq 100 triple Qs, we also have gaps open that'll take us all the way down to a price target of 276. We got bullish price action because we're still closing above the 5 EMA, and we still have bullish trending because the 5 EMA is still trading above all the other moving averages. Our Fibonacci retracement levels are shown here, and you can see that with today's price action, we already closed below the 0.236 and we're getting close to the 0.382. It'll take somewhere around a 0.618 to close some of this gap down here. And if we blast right through that, it's likely that we're coming back to the support trend line somewhere around price target of 273. Now the Nasdaq 100 was the only index to close in the red today, so it's likely that we're seeing some selling in technology and rotation into industrials on the vaccine news. You could see that represented in the price action because we did not form a higher high on the daily chart today. We're still being held down below the resistance line here at 294, which was our last high on the daily chart. So the Nasdaq 100 is not looking as bullish as the S&P 500 and the Dow Jones, but we're still holding up with bullish price action and bullish trending. Next up is the Dow Jones Industrial's DIA ETF, and we see the Dow had an absolute monster gap up today, which took us to new all-time highs, and we were well above the Bollinger Band. We had a huge gap that was open, and we sold off all day long, and we did squeeze that gap a little bit, but you can see that that gap is still huge and it won't close until a price target of 284. That would be somewhere around a 0.382 Fibonacci retracement level, and it would also bring us somewhere around our support trend line, which was our resistance trend line before we broke out with today's gap up. The trending is bullish and the price action is bullish. So on the Dow, it looks like we're just looking for opportunities to buy the dip, because going against the trend is not the way you want to trade this market. The bullish price action and the bullish trend are all around all three indices. And right now, even though we could continue to retrace, that is a buying opportunity and not necessarily the time to be adding to a short position. Now we do have gaps on the DIA ETF that will take us all the way down to 269 and 265, but it's not likely that we're going to fill gaps that far down if we're in a bullish trend. Remember, we only look for gaps on the downside that far down if we're in a bearish trend. So right now the trend is bullish and the price action is bullish, so it's really only looking like we're going to fill this top gap in the short term, and we're likely going to find support somewhere at one of these Fibonacci retracement levels, which close well above the last two gaps. Next up is the VIX, which is our fear indicator, and we see the VIX going up over 3.5% today, even though the S&P 500 went up today. So that shows there's still volatility in this market, and while the VIX is declining and we saw fear leaving this market, it's still not completely gone, and we're still likely going to see some volatility in this market. A VIX level in the mid 20s only takes one spike of volatility, and we're back in the high 20s and low 30s, where we could still see 2 or 3% swings to the downside. So you could see that the VIX is definitely showing bearish trending and bearish price action. So it's not like we're being bearish on this market. The VIX is showing us that fear is leaving, and if fear continues to leave the market's likely to continue to grind higher. So the VIX aligns with our long-term bullish thesis, but it's showing in the short term there could be some more volatility, and we could continue to see some selling for the next couple of days. Next up is Apple stock, which is our market moving stock, and we see Apple stock had a bearish day today, closing down minus 2% and going back under our resistance trend line. So it did look like we were starting to get a breakout above that resistance trend line, but with today's price action, we're back within that level. We closed the gap a little bit, but that gap still won't close until we get to a price target of $115. The price action and the trend are still bullish, but it's a weak bullish trend, and we don't see a lot of separation from the moving averages just yet. If we close below the moving averages and the gap at 115, we do have another gap at 111. If we close below 111, we have support at 108, and if we close below 108, we're likely going back down to the gap at 96. But right now, the trend and the price action are still bullish, and we're only a day or two away from knowing if we're going to break back above this resistance trend line and start running on Apple. Next up is Tesla stock, and we see Tesla also had a wild day. While it did open up higher, it did close down 2% on the close. We're back below the 20 simple moving average, which is not bullish, and we still have a short-term bull trend, but it is weakening. So Tesla is still trading sideways, and we can tell because the 20 simple moving average is still flat. So we don't have any real strong trending on Tesla, and the price action is pretty neutral, closing right around the 20 simple moving average. The only good news on Tesla is we did close back above the 50 EMA, and we're trading above the 50 EMA, which has been a strong support level for Tesla. So if Tesla can hold around this area and start heading higher, we need Tesla to form another daily higher high, which would be a price target of around $461. So right now, Tesla's going neutral, and it could go either direction, so you need to watch the price action and watch the trend. Next up is gold, and we see gold had a pretty bearish day, going all the way back to our 1860 support level. It does look like gold is going to find support around that level, and we could already see that we're starting to get a small bounce. So this is why I say when we break resistance levels, we want to see a test of resistance and act as support and another bounce, because you can get days like today where that support level does not hold up and it goes all the way back to our previous support level. So yeah, this could be a good buying opportunity for gold if this support level holds up, and we could see a bounce off of these levels and a continuation of that bull trend that we were starting to get on gold. However, if 1860 doesn't hold up, it's likely that we're going down to the next support level at 1809. Next up is silver, and we see silver also did not test that resistance as support and get a bounce, and we went well above the support level, and we're now trading below the moving averages. It looks like silver is finding a support trend line somewhere in this area, and we are starting to get a bounce off of today's low. If we don't continue to head higher on silver, our next support level is back at previous support at 22.5. Next up is the US dollar, and we see the dollar looking like it did find support at previous support, and we did get a bounce today. We still have bearish trending and bearish price action because we're still closing below all the moving averages, and all the moving averages are stacked to the bear side. So we'll see if this bounce is just a short-term bounce before we resume downward, or if we're going to start reversing this bear trend. Remember that a weak dollar is bullish for assets like gold and stock prices because we're likely going to see more inflation. Next up is the financial sector, and we see extreme bullish price action and extreme bullish trending going on in financials. So that's great news for the S&P 500, because if the sectors are doing well, we're likely to see new all-time highs on the S&P 500 soon. We also see bullish price action and bullish trending on the industrials, and we also did close right up there on that upper Bollinger Band. So extreme bullish price action and bullish trending building up on the industrial sector. On the healthcare sector, we see continuation of the bull trend and the bullish price action, and all three sectors are looking great. So once we start seeing strength return to technology, it's likely the S&P 500 is going to start forming new all-time highs in the very near future. Next up is Bitcoin, and we see Bitcoin still in consolidation and still holding up with that bullish price action and the bullish trending. Our next price target on Bitcoin is still at $17,000, and it looks like we're slowly grinding higher, getting towards that price target. We still see a lot of good volume going on, and there's still a lot of people buying into Bitcoin, so that only confirms our thesis that we're likely going to see the next price target at $17,000 soon, because we still see a lot of volume and a lot of bullish price action and bullish trending. You could see that that 50 EMA is starting to aggressively slope to the upside, and so is the 20 simple moving average. So that shows we have a lot of bullish momentum, which is carrying Bitcoin to higher and higher prices. So to summarize this, you can see bullish price action and bullish trending all around the stock market, maybe with the exception of Nasdaq 100 and technology sector, but they could just be cooling off during a short-term rotation before buyers start stepping back in on technology. So we are bullish long-term on the stock market, and we are looking for the S&P 500 to start forming new all-time highs in the very near future. But before we get there, it's likely we could see some selling for the next couple of days, and you really want to watch these gaps in these Fibonacci retracement levels for possible support. So remember, as we're pulling back, it could be like a falling knife, and if we start heading down, you want to wait for confirmation bounces before you go long on this market. Watch these levels closely, and also watch these gaps at 351 and all the way down here at 338. Those could be great buying opportunities, and it could be like buying at the bottom in the next bull market. So don't forget, we also have the Stocks Channel Discord. If you're looking for entries and exits on trades and you're not really sure how to trade this market, consider joining the Discord server, and the link is in the description on how you can do that. So please remember to help me out by smashing that like button, and if you're new to the channel, go ahead and smash that subscribe button so you can follow along with all of my daily updates. Thanks for watching, everybody. Good luck out there, and as always, I will see you in the next episode.